Hello, how are you doing today? I hope you're having a wonderful day. Today we're diving deep into the world of mortgages, and more specifically mortgage prepayment. You know, the thing where you pay extra on your mortgage so you pay it off sooner? Is it worth it? Or is there a better option? Whether you're a homeowner that has been in your home for years or a new homeowner, understanding how prepayments work and how to make them that they can significantly impact your financial future. So let's talk about it. Let's start with the basics. Mortgage prepayment is when you pay extra on your mortgage principal. It's like giving your mortgage a little extra love, and the idea is to pay off your mortgage faster, saving you money on interest in the long run. Now, most people, when they have a mortgage payment, it consists of 4 things: principal, interest, taxes, and insurance. If you have a fixed rate mortgage, then your principal and interest will not change. It's fixed rate, so those principal and interest will not change. But the tax and insurance escrow probably will change, and it probably will go up every year. So we're focusing on the fixed part, the principal and the interest. Your interest rate will always stay the same, but the amount of your payment that goes to principal and interest every month is going to change. Because as that principal goes down, a little bit goes to it, a very little bit goes to it at the beginning of your loan. So as you pay that principal down, your interest rate, how much of your payment is going to interest, is also going to go down, because the interest is what decides how much is being charged every month. So your principal balance is taken multiplied by your interest rate, and that is how much is going to be going toward that each month. So the point of the pay down of the prepayment is to get that principal lower, so more is going toward it every month. It just snowballs. Once you are paying more plus your regular payment, it just gets that principal down faster and builds up your equity faster. Prepaying on your mortgage can be a serious money saver in the long run, but there are pros and cons to every situation. Imagine having your house fully paid off years before schedule. This is a huge stress reliever and gives you financial peace. That alone is a huge pro. That financial freedom will allow you to have money to do other things with, or you can just work less and retire early. Plus, if you build your equity faster, you can use that to buy another home, a bigger home, because you'll have more money because you have more equity in the home that you own, or you won't have any mortgage at all, or you can buy a smaller home and use it to save up for vacation or retirement. It just helps you build your wealth by paying off that mortgage quicker. It will help you retire early, save for other projects. You can maybe stay in your home and do a bunch of renovations, but it'll definitely give you financial peace. You'll pay significantly less interest, potentially saving thousands. It really does snowball quickly when you start paying on that principal. You'll get rid of the monthly mortgage payments. It will lighten your financial pressure on the household, and you'll free up future funds for other goals: retirement, college funds, emergency funds, a vacation. There's so much else you can be doing with your money than sending it to the bank. Of course, there's the downside of prepaying. It's not all sunshine and rainbows. Prepaying means you have less cash on hand. What if an emergency happens? You might need to tap into your savings, or even worse, rack up credit card debt. You can also consider investment options. Could you get a better return on investing that extra money instead of applying it towards your principal? Now, personally, I apply the Dave Ramsey policy, and you should be having no credit card debt if you're ready to be paying off your mortgage. You have baby steps that you go through. You pay off your debt, you have your emergency fund, so you don't have to use credit cards, you don't have to dip into your savings, because you have that emergency fund available when emergencies pop up. Once you get those established, then you start working on paying off the principal on your mortgage. That's after all your other debt. And so you'll have that emergency fund if things pop up, and you can continue to apply that extra money towards the principal on your mortgage. Now, if you decide that the investment is better, again, Dave Ramsey suggests that once you get your emergency fund and your debt's all paid off, that you apply 15% of your income to your retirement fund. Just 15% while you're paying off the mortgage. Once you get the mortgage paid off, then you can apply more. So at least you are building a small nest egg for your investments, but the majority of your extra money goes towards your principal. That's just one viewpoint on how to do things, but I understand that it can seem like it makes a lot of sense if you can earn 10% or more on an investment, but if your mortgage is only 2, 3, 4%. So you really need to talk with your financial advisor and decide what's the best policy for you. Now, prepayments can come with penalties, so you want to make sure that you read your mortgage in the fine print and see if there's any fees for prepaying on your mortgage. Another thing is you will lose the mortgage interest tax deduction if you itemize your returns. How many people itemize their returns? Not very many. I don't itemize on my federal return, but I do itemize on my state return, so it does have an effect. Again, you'd have to look at your interest rate and that tax deduction and decide if it would be worth it, but more than likely, you're going to save a lot more money by paying down on your principal than getting that mortgage and tax deduction. Another thing is that investment. Does it make more sense to put it on your investments? You just need to think about what is best for your situation, but I encourage you to do a little bit of both, investments and pay down your principal. So when should you consider prepaying on your mortgage? If you have extra cash in your budget after you've paid all your bills and you don't have any debt and you have your emergency fund, it's a better place to put it on your principal than earning next to nothing in your savings account at your local bank, which is usually 0.1%, 0.01%. It might be a really good option to you actually saving money and putting the money where it will get you the best return. If you're planning to stay in your home for a long time, usually people stay 3 or more years, it could make sense to give you a chance to really build up that equity. Now, if you're not sure about how long you're staying or where you're going to be needing your money, then maybe it's not the best time for you to be putting on your principal, and that's definitely why you need to speak with your financial advisor. So there's a couple different ways that you can prepay. You can make an extra principal payment with each mortgage payment. That's the way I do it. You can make lump sum payments like at the end of the year, or you get a tax return, or you have an inheritance, or even think about refinancing to a shorter term. It's important to choose a strategy that really fits your financial situation and goals. Now you can do a shorter term mortgage. 15 years is probably what's recommended. That's the way you can get it paid out the quickest, and usually you can get a lower interest rate if you start out with a longer term. Or you can do what I did, where I did a longer term and then you just plan on paying the extra if you're really focused on being budget minded and committed to paying that extra payment. Another option is you can do bi-weekly payments versus monthly payments. And then you think about just start out small, just make a little bit every month, maybe 50, maybe 100, work up to 500 or even 1,000 extra on your mortgage payment. It will really snowball. If you start making that commitment, you'll be surprised about where you can find extra money in your budget. Before making any big financial decisions, it's always a good idea to talk to a financial advisor. Whether that's your parents, your friend, your spouse, or hiring a certified financial professional, they can help you weigh the pros and cons for you and create a plan that is best for your future. Make sure you get that advice and follow a proven plan like Dave Ramsey or somebody else that you feel that you can trust with the way that they've run their lives. There you have it. Mortgage prepayment can be a smart financial move, but it's not for everyone. Do your research, consider your options, and make the best financial decision for you. I hope you feel empowered to take control of your mortgage and save money in the process. If you have any questions or want to share your own experience with mortgage prepayment, drop a comment below. And if you found this video helpful, hit the like button and subscribe for more financial tips and housing information. We also have another video about building equity. Thanks for watching and have a blessed day.